Good morning, folks. This is Kelly Buckley, Managing Principal of Spectrum Financial Alliance. It's Tuesday, July 29th, 2025, and we're going through a very busy week. I wanted to let you know some of the things you could expect in the days ahead. As you're probably aware, this weekend the European Union, one of our nation's largest international trading partners, has come to an agreement on new U.S. tariffs and eliminated virtually all trade restrictions they had previously had on goods sold by the United States. The EU has agreed to accept a 15% tariff on everything they export to our country, while charging our country 0% tariffs. The European Union is also obligated to buy over $750 billion of our nation's energy resources, primarily liquid natural gas, or LNG. That's going to wean them off Russian-supplied LNG, making this a very important strategic coup for our country and a way to starve Russia's war machine in Ukraine very quickly. In addition, the EU has pledged hundreds of billions of dollars in new investment in plants and equipment within the U.S., creating new employment inside the United States. This follows last week's completion of several agreements with Japan, Indonesia, the Philippines, with important progress having been made during a sit-down meeting also with the Chinese in Europe. While the tariff talks are going fabulously well and trade barriers are literally falling left and right on American goods, we're also realizing trillions of dollars of new investment that's coming from countries like Japan, who last week pledged $550 billion of new investment in the U.S. And the EU, who not only has obligated itself to buy $750 billion of American energy supplies, but also to invest $660 million in new investment in our country, not related to their ongoing current purchases. Folks, the amount of stimulus that is being added to our country is literally mind-boggling. And at the same time, we're seeing inflation moderate to 2.5%, with GDP going up to 2.6% in the second quarter. The Federal Open Market Committee is meeting to determine the path of short-term interest rates this week. And while we don't expect a reduction at this July Fed meeting, we are projecting that reductions will begin at their next meeting in October. That's a lot of economic data that's going to be coming out around the time of the Federal Reserve's interest rate decision, including consumer confidence numbers today, which were well above analyst expectations, jobless claims, which come out on Thursday, along with the Fed's preferred inflation statistics, something that they call the Personal Consumption Expenditure Index. And we also have payroll reports. So this week is the largest week for second quarter corporate earnings reports. And as we predicted so far, earnings are significantly exceeding prior estimates, with more than 60% of companies having reported so far. We're seeing an increase in year-over-year earnings greater than 9%. That's huge. This has also been a big surprise to analysts, but our firm over a year ago said that the trend of earnings surprises would not only continue, but would likely accelerate. So we're looking at a reasonably low inflation rate, much higher than normal earnings growth, massive new investment in our country's manufacturing, plants, and infrastructure, a significant decline in short-term rates soon to begin, which should start in October and then carry through the fourth quarter, and rising consumer confidence. This sounds like the perfect recipe for a rapidly growing economy. We believe that rapidly growing economy will continue to propel our clients' returns both year to date and on a 3-year basis, likely on a 5-year basis, with returns that are well above the Dow Jones Index normal net returns. Our clients received a mailed mid-year review this week, and we hope you'll have time to carefully read those. Our firm's pursuit of investment and financial planning excellence will continue with a strong desire to do an even better job for you. Enjoy the week, folks. It's going to be a good ride. God bless.